Hey guys, Landy here, and I want to welcome you to Landy's Crypto Corner. Today is March 19th, 2023, and I'm a little late talking about this, and I don't usually talk about speculation like this, but I did want to talk a little bit about the Bitcoin to $1 million in 90 days talk that's going around and why it's pretty much a giant hoax and it's being misconstrued, and the person who put this bet together on Twitter is just kind of furthering the misinterpretation of what was said to begin with. And this is Balaji on Twitter, and he had mentioned that he was going to take $1 million bet with James Medlock, I believe. Excuse me while I adjust my chair here. But basically, he's taking $1 million bet, and this bet is that he has James buy one Bitcoin. He sends $1 million. They put it in escrow. Talks about the odds and that it's 90 days, and everyone has seized on the opportunity to take this and morph it into Bitcoin will be going to 90 or to $1 million in 90 days. So pretty silly, but good marketing on his part. And, he obviously has a vested interest for the different companies and shows that he's companies that he runs and then shows that he's on. The other reason why he's pretty darn famous is if we go back into his Twitter thread, before the pandemic outbreak, he had posted this to Twitter about what if the coronavirus is a pandemic that public health people have been warning us for years. It would accelerate many pre-existing trends. And then he goes through the trends. So not really, anything too crazy, but he was kind of early to kind of calling out what he believed was going to happen as a result of the pandemic. And I did want to kind of address it because I'm looking at all the thumbnails as I make mine, and thought it was pretty darn funny to see the way that this was being utilized to drive engagement for Twitter followers and YouTube and TikTok and Instagram, so on and so forth. So now Bitcoin to $1 million, I do want to point something out. Bitcoin, I do believe someday might be $1 million, but what does that actually mean? Well, that means that fiat currency as a medium of exchange is no longer viable and is not being used. So that is that something that may happen in the future? Absolutely. It's definitely not happening in 90 days. Yes, Dixie's in a downtrend. I don't usually look at other charts here on this channel, but Dixie's in a downtrend. The only way that this really regains ground is by taking this block here. This is Renko 105.37 where it just rejected from, and then it's subsequently got to break some of the overhead resistances, and then it's going to encounter quite a lot of resistance around 110.50 or so. I do think things will probably proceed higher for Bitcoin. I'm going to point out exactly why that could be the case. You can see it. We're going to start off here with the Renko chart here on the index on the daily. So this is running an ATR 14 period look back. 950 bars, and and we can very easily see kind of what's going on right now, and it might be a little bit easier as I do have my lines already snapped down on the Coinbase chart, but on the daily we have had our Renko block print for that $27,000 area. We now have another block in progress, two blocks in progress, in fact. So what does this tell me? It tells me that most likely the next target is going to be in and around that $29,000 to $30,000 area. This consolidation that was a redistribution consolidation before coming down and painting a Renko triple bottom pattern. Basically, it's almost a quadruple bottom. You got two bottoms, 3, 4. So we higher load our way out of this. And the next target range is going to be up here. I do think, 28 to 30, we're right in that area. We've already hit 28. and mid 28s on a regular chart. And in this case, the top side's coming in at, almost $32,000. That is definitely on the table now. And I think, pullbacks are going to be, expected in and around this area. But as I've said in the past, shorts don't have any cover right now. I mean, the only cover they had when we were in and below $25,000 were the ranges above. From a time frame perspective, not many people are holding shorts from up here. It's just not viable. At best, they were holding shorts from around the $30,000 areas, and then as we were in the $25,000 area, filling back up and or averaging down, taking profits, so on and so forth when looking at derivatives. And then the range play was basically that $24,000 to $25,000, break above and outside of that range. Shorts don't have any cover in the derivative markets. They have to short the local moves. So it's much easier for the longs, in this case, to take over price action on the derivative side. But this is all based on spot price action. You got to have buyers, and then the derivatives markets can then float along with the buyers and or sellers. So whenever we do see sellers enter the market on the spot side of things, that's when the short side or the bear side of the equation for the derivatives markets can start to gain some traction again. But right now, that's just, it's waiting for a bigger player to really come in and sell. That's what the short side would need right now. And we're approaching overhead resistance, so I would not rule out some pullbacks, maybe even right from where Bitcoin is trading, or a bit higher. I would expect some pullbacks here or higher anyway, and I'll show you why that is. But we do see that right now we are trading above the $28,000 Renko block. That gives us, the $28,000 to $29,000 range here on Renko. And then looking from a Renko perspective, it's not going to be tick for tick with a regular chart, but between $29,000 and $31,000 is the next big area, up to around that wick at 32, where it failed to reclaim this block here at $32,000. So that's the next area to look to the upside. Then what is the downside? Well, the downside right now would be painting any kind of a brick on Renko back below around $27,000. That's where we'd be looking for downside price action to around that $25,500 to $24,000. $24,000 is kind of the line in the sand. Break back below there, or even a reclaim of the high is not going to look at around that 25.2, but we're talking Renko right now. So going back to 25,000 on Renko avoids a reclaim of this wick high here at 24,844.97. So when looking at Renko, it's going to be a little bit different than when we flip over to the spot side chart, but I did want to check back in with something very, very important that I mentioned earlier this week in one of the videos. Might have been last week. But we're on the verge here in just about an hour and 5 minutes of closing on a regular chart, a weekly reversal breakout, right? And here on the Renko chart, we can see that clearly we wicked below, and then we did not complete a block fill and came right back up. We have completed one block. We're working on the next. We need for the ATR to basically catch up. It will print the block, and then we're in the next projection block. Right now, because the weekly on a regular chart is not closed, I would not say that this is 100% set in stone, but we can see that very clearly here at this level that we're looking at, that the weekly won't let me snap to the block because it's not complete. The weekly is coming in at $28,000. So a closure on spot price action above $28,000 will, in my opinion, lock this Renko brick in. This is a weekly reversal. This is what I've been talking about with my friends in our trading group. It's not a paid group. I will set up it. I got some questions about like, hey, do you have like a group or something? No, I don't have any paid groups. I don't have any paid educational materials or anything like that. It's just a free group of friends that talk trading. That's all. If there's enough interest, I will start like a Discord or something. But at the moment, I'm just a tiny channel. I feel like I'm kind of speaking into the void, but that's fine. I enjoy talking about this stuff. So if you get some enjoyment out of it or you learn something, great. Give me some feedback. That would be good too. So I know where people kind of, what level of understanding people have that are watching this content. But in this case, weekly closure here above $28,000. We are looking to target the next Renko block up, and that's to guess where. We just talked about this, around $32,000, somewhere in between the $28,000 to $32,000 range. I would expect, like I said in some of the previous videos, to the upside around $28,000 to $30,000. We're in that zone now, and then just kind of take it one step at a time. So this is really significant. Just so you understand, we haven't seen this, since August of 2021 here on a Renko chart. And then the only other one outside of that was in October of 2020. So let's go ahead and take a look at a regular candlestick chart here. Let's go ahead and get rid of that. Let's turn on regular candles and see where we are here on the more macro time frames. So here on the weekly, we are looking at, as it stands right now with about an hour left to go in the weekly close, we're looking at a closure above the second standard deviation Bollinger Band to the upside here. Let's go ahead and turn on the labels, make it a little bit easier to understand as I talk through this. And I got to work on some of the code here so that you can select the EMAs to not have those labels be turned on with the Bollinger Bands. Still working on that. I haven't had time lately, but I'll get it done. If you are interested in picking this indicator up, it's 100% free. It's in beta. It will remain free when I do publish it for the regular searchable index on TradingView's indicators. But, I've still got some work to do on it. If you'd like to get it, you can just go down and link in the description. I've been linking it in each video lately. So you just go there, add the indicator to your chart, or to your favorites rather, and then you can just go into your favorites and it should show up in your indicators. And then give me some feedback if you like it, you hate it, doesn't matter. Any feedback is good feedback right now so that I can kind of get things straightened out in it. Now, when this does close, of course, we are going to see the Bollinger Bands expand further to the upside here. And the 20 simple is going to tick up as well. I don't have any kind of projection built into this right now, but I am working on that. In this case, a closure today above 27,150 or so, second standard deviation is going to get some pretty aggressive upside expansion. I expect the third standard deviation to come right in around that $32,000, which here on the weekly is, it up around the wicks of that daily redistribution pattern. So in this case, I am looking for further upside from here. Now, that being said, I do expect the first standard deviation to the downside, or the upper first standard deviation rather, to come up to around $24,000. So that's a breakdown point. That's no longer a pullback. If we do see $24,000, especially on a weekly, get reclaimed, that's a breakdown. And I would expect not only this low to get ran, but I would expect much, much lower down to the first and second standard deviations, which will put Bitcoin on brand new lows. So just understand that while that's not something that I expect to happen, be aware that if we did break back down below $24,000 on a weekly time frame and on a close, then I would be looking significantly further down. Now, does that mean that we would get significantly further down price action? No, but it's not. That would not be good for Bitcoin. So in this case, the weekly is going to twist back up on Stoke here upon close today, and it's the price pivot's 25,600 on the weekly. So we're looking for some pullbacks here soon, but cross back up. is going to change this number to somewhere around the most recent low, I expect. And that's going to be, somewhere probably around either the open or close or the wicks, somewhere around $22,000 or so. And I'll update you on that if you are interested when the new weekly candle opens on my video tomorrow. In this case, things look good for further upside, especially as we're coming into the quarterly close. And I do want to draw your attention to the quarterly. This quarterly, the Bollinger Band's not going to be as helpful on the quarterly here, as I've mentioned before, but just from a candlestick perspective, and so we can get some more history here, we'll go to the index. This is a quarterly reversal. So this does imply significantly higher targets. We're coming right into around that $30,000 quarterly close open from the initial push up and quarterly breakout in October of 2020. And that close open is going to be a big area. It was also support for 2 quarterlies after. So, we've got, 3 quarterly candles above us as overhead resistance. So expecting pullbacks here is absolutely 100% a valid expectation to have. And, that's going to be something to pay attention to as we come into this week, especially as I do think we have some potential for further upside price action, but things probably need to cool down here pretty soon. But this in 12 days and 1 hour, which is going to become, less than 12 days here in a little bit, right? Don't look at this and just automatically be bearish on like the daily chart or something when you're looking at the daily and you do see pullbacks and stuff like that, because this quarterly could close here. And if it does close above, in this case, if we get a closure above this guy here at 25,200, well, that's a quarterly reversal. And this quarterly, just to draw your attention to this, would also print a hidden bullish divergence. And this would imply, a move back up to somewhere over time, somewhere around the bullish control zone and the signal line up here. The bullish control zone is coming in at 45,543. And that's going to be interesting. So remember that the SMA is coming in at 51,073. SMA is probably going to come down just a hair here, coming into the quarterly close. But why is that interesting? Well, that's interesting because when looking at the weekly as well, I forgot to mention this, but that's basically targeting what I do think may, once it's closed above on a weekly, monthly, or something like that, above $48,000, we're probably looking at pullbacks. But that from there, after that area is taken out on a longer time frame, I do expect the highs to get ran, and then after the highs, we go on probably a face melting rally to the upside. I won't be talking about like super deep targets from here. But when the time is right, I will start talking about brand new highs and stuff like that. It's just not appropriate right now. When looking at the weekly, I did want to draw your attention to this. This is going to confirm a bullish divergence. Now, this is a hidden bull div or a continuation drive. We have our regular bullish divergences down here. This was the hidden bullish divergence or continuation drive coming from the RSI dipping slightly below where RSI was on the higher low on the weekly there. And, we did get a higher low yet again here. So we've got higher lows, higher high, higher low, higher high. Let's zoom in so you can actually see. So we've got our higher low, higher high, higher low, higher high, higher low. We've got a full trend. So don't fade the trend until the end of the trend, right? So this just looks like it just wants to rip. But I am trying to be logical about it. So we are coming into resistance. There is a bit of an order block here on the weekly as well. Yes, I do order blocks a little bit differently than some others you may see. But when I get into order books, which I will touch on here soon, I will explain why those areas are order blocks in the way that I approach trading this kind of stuff. So from the daily perspective, let's go ahead and take a look here. We're seeing third standard deviation to the upside here at 29,960. We are pretty far up there on RSI. There will be bearish divergences that will print here. These would be hidden bear divs because they would not be in trend. So they will print in a different color. If I remember correctly, yeah, they're going to be orange. So when those do print, they're not automatic, like fade the rally signals, but they do start to show that there might be signs of weakness. Now, if things really do get aggressive to the upside, we can actually project that. Bull critical zone is the 80 read up here. We're at the 70 read, which, in traditional ways of reading RSI, this is your signal to go short, right? Well, not necessarily. You want to see bearish divergences build in trend before you just take a short blindly. And in this case, we can see that the 80 read up here, this is running Wilders, is around $32,000, which is an area that we just talked about. And if Bitcoin, closes here or higher in the daily, that would target the third standard upward deviation here, which is probably going to be, it's already at $30,000, probably going to be somewhere mid 30s to 31,000. So I wouldn't rule out wicks there in the next, coming closures here. Now, anything back below 27,776 from this current position, it's going to be more like $28,000 or around the current high. So basically, if Bitcoin doesn't continue higher in this daily, it at least needs to hold above the first standard deviation here, which is coming in at $26,000 right now. That will also be a little bit further up. I imagine it's going to be probably around 26,500 or so. Maybe, you know what? No, it's 25,600 right now. My apologies. So it's probably going to be around $26,000. And in some lower term time frames, we might have precedent for that if I'm not mistaken. 26,000 is going to be, this high here. So this high is untested. If this high is reclaimed by the bears, that would be below the 4-hour lower first standard deviation. It'd be targeting around that 25,200 at the lower second standard deviation. So that's kind of the risk. That area needs to hold up. If it does, I think we got the green light to start looking a little bit higher, at least in the immediate short term, and then we come back to it later. Now the daily Stoke is still headed up. Daily momentum pivot's going to be 26,700. So if we do see closures under 26,700, that would imply that not only are we going down to test, but we could get a deeper pullback. And from the daily perspective, down to around that 25,200, $26,000, I'm looking for further upside in the immediate daily time frames. But, a reclaim back below 25,200 is going to beget probably probably a deeper retrace, somewhere around the 23,500 basis band to around 24,150, 24,250 area where the 21 EMA is currently coming in. You can also see that to remain in a really strong uptrend, we have the 9 EMA here, and I can adjust the indicator to show you what I'm talking about here. We'll take the standard deviations off, and we'll throw the 921 EMA on here. We can actually throw the whole set on here. 34, 50, 55, 100, 200 EMA, and 200 SMA. At some point, I'm going to have some educational videos. I'm working on one that's coming out in maybe this week. I might be releasing it this week. It's It's Bollinger Bands explained, basically a Bollinger Band masterclass, where I teach you everything you need to know about traditional Bollinger Bands, which utilize a basis of the 20 simple and 2 standard deviations away from the 20 simple. I'm going to be teaching about that, Bollinger Band percent and Bollinger Band width. That's just going to be to kind of get everybody up to speed on what Bollinger Bands are. And then I'll have a strategy video for, they might turn into more than one video. But I will have a strategy video on how to use these particular sets of Bollinger Bands that I've created using first, second, and third standard deviations in conjunction with the BBWP, which is a caretaker indicator. And he did give me permission to actually integrate the math for the BBWP into the Bollinger Band set that I have. So he's an awesome dude. I plan to do that soon, but I'm not ready just yet. And in fact, let's actually turn that back on, because I do want to point out that Bollinger Bands are saying that we're ready for a pullback pretty soon here. But I'm sorry, BBWP. You can see that it's redlining around 100%. When it does cross under the moving average, that does indicate that we should be looking for a pullback, or we're already getting a pullback, in this case, mean reversion. So like I said, mean reversion down to the 25,200 area, $26,000 or so. Perfectly fine. Looking for further upside. If we see things, get below there, we're looking at, worst case scenario, 24,200 needs to hold up, or it's going to be a much deeper retrace. And in this case, we've got the 9 and 21. We have the 34, which I don't have labeled here. This red guy right here, around 23,650, 660 area. We have the 50 simple and the 55. Now, the reason why I use SMAs and EMAs is because EMAs are faster than the SMA. And when EMAs are above the SMAs, it usually implies a very strong trend. And in this case, the 55 is headed towards the 50 there at around $23,000, which is the 50 SMA in blue, 55 in green. And in this case, when they do cross, that's going to indicate a very good base. We also have the 200 EMA above the 200 SMA. And then this gray guy here is the 100 EMA. So once all of these are stacked and aligned, where the EMAs are above the SMAs, and all straightened out, we're going to be in a very rip-roaring rally to the upside here. Now, in the longer term, you can see that with Bollinger Bands really spread out like this, volatility is very high. High volatility environments are perfect for traders like myself that trade daily price action and trade, basically the swings in price action as well for those longer term trades. You can see that, the Bollinger Band set is really wide here. And let me turn back on the actual Bollinger Band basis, upper third to the lower third. Now, this does open up the possibility of horrible downside. That is not my first take on this. All right. And I just provided you with a lot of evidence as to why I'm still looking further to the north in terms of price action. But because the Bollinger Bands are so spread out on the daily, until we see a consolidation that then continues higher. So we got to take our trend, and our trend is the first thing that we need to be aware of, and we're in an uptrend. So good, right? We have support and resistance. We're above, the prior resistance. It has been in lower term timeframes back tested as support. Has not had a higher term time frame back test just yet on the daily. You might consider this candle here on Friday to be that back test, because it did come down and touch the candles before it and the highs over here to test, but it took off so quickly that there's a lot of gap in volume there. So this being retested as support, absolutely on the table. I would expect that on a pullback. So if it does hold as support, easy trades back to the upside, as long as as what we're seeing as signs of strength on those lower term timeframes. Now, if things were to break down, we need to be aware that we can run from one side of the Bollinger Bands all the way to the other, as we did from top side of the Bollinger Bands here in mid-February to early March to the bottom side, and then right back to the top. Well, we can keep painting this type of a pattern because volatility is picking up, right? And not only is volatility picking up in the daily, but it's picking up in those higher time frames than a daily. So until we see some consolidation, which also would imply an area that we are opening up the possibilities for lower highs on the daily. Until we see that, it's really going to be, in my opinion, a highly volatile environment that does create the possibility of running from one side to the other. So as long as things are above that 25,000, I think that it's very likely that we continue this uptrend and continue maybe even from here after close today. So that's basically where I stand on that stuff. Now, I did want to say in relation to the $1 million stuff that I mentioned earlier, there is a gentleman by the name of Jason Lowry who has just released a book. His book is basically a thesis that he has submitted that he submitted to MIT. He is a member of the DoD that's part of the fellowship program that went to MIT to basically study his master's thesis is on Bitcoin basically and proof of work blockchain technologies. Now, the thesis that he proposes is Bitcoin as a national security asset that should be held by the U.S. government. We already know that other governments around the world are utilizing proof of work blockchains in this way anyway. And it's a conversation that's been had. He's furthered the conversation to depths that many people have not even explored. But Bitcoin as a base layer for the internet and intranets, so the wider open internet and intranets or internal networks, and Bitcoin being used to secure those networks and at a base layer is something that is not new. It's a conversation that's been happening for a very long time. He's taken that conversation and made it into something that I think is brilliant and accurate. So that being said, with the $1 million Bitcoin conversation, I do think that someday Bitcoin could absolutely go to $1 million. And I don't think that is, I don't think that that's too far fetched. Fiat currencies, collapsing and, new standards taking over and different fiats rising. I don't think Bitcoin is necessarily destined to become the monetary, the monetary powerhouse in terms of transactions that people think it's going to be. I think it's going to be a common, widely held asset that will have a very, very high price. But there's probably going to be systems built around it, whether that's, a fiat system or not, but there's probably going to be some sort of currency systems built around it. As supply dries up, it's going to just become harder and harder to obtain. Therefore, the price is going to skyrocket. So the whole $1 million in 90 days thing is just a bunch of, people having fun for the algorithms and engagement, and that someday in the future, but definitely not in 90 days. And I am a believer in Bitcoin. That's the only thing I chart for you here on this channel. And I'm going to probably get more into that side of things as we go along, but I'm going to stick to charts for now. I hope that you did find some of this information useful in terms of some of the targets that I've laid out for you here to the upside, pullback, and the potential breakdown areas. If you did find it helpful, please go ahead and give me a like and a subscribe down there. And if you think that anybody else might find it helpful, go ahead and share it with them. I am trying to grow the channel, and in this case, looking to just talk into the void a little bit more and see how many people find it interesting. And if you do, I'll keep going with this and a little bit further down into teaching some more trading stuff. So I want to thank you. I hope you had a wonderful weekend. You have a great morning, afternoon, and evening, no matter where you're in the world. Please trade safe. And of course, as always, stay safe. And with all of that being said, Landy out.